Hi guys, welcome back to the LiteFinance Global YouTube channel. As usual, it's my pleasure to be with you. Today, very interesting topic, very hot topic. We are going to discuss flag-based trading strategies. So, without further ado, let's jump straight into the video. Fantastic opportunity for all LiteFinance clients. New Year gifts from LiteFinance are waiting for the winners. 5 stages. The first one ending 22nd of January, and we are talking about the iPhone 15 Pro Max 1 TB. Second stage January 24th, iPad Pro. The third stage ending January 26th, MacBook Pro 16. Fourth stage ending January 29, 50 prices of 50 each. And fifth stage ending January 31st, 50 prices of $10 each. More details you will find in the link you can find below. Before we start, as usual, please like, subscribe if you haven't already. Leave your comments below. What do you think when it comes to the flag trading strategies? Alright, flag trading is a technical analysis strategy used by traders to identify potential trend continuation. Sometimes it could be the reversal patterns when it comes to the financial markets. Flags are chart patterns that can indicate a temporary consolidation or pause in the prevailing trend before the price resumes the previous direction. Alright, so let me briefly show you that strong move to the upside, alright, and then we have some kind of the consolidation. Very often it might be some kind of the very shallow downward channel, alright, and the price is moving within some kind of the range, okay, when it comes to the bull flag. Also, when it comes to the bear flag, we have the example here. More we are going to discuss in a second, especially that I wanna to discuss with you some tricks when it comes to flag trading. Okay, now bull flag formation occurs in an uptrend, of course. Of course, that's gonna be opposite when it comes to the bear flag, something like this, and the attempt to go higher. Now, appearance, a rectangular shaped consolidation after a strong upward price movement. That's what I already told you about with this possible a little bit downward channel when it comes to the bull flag and upward channel when it comes to the bear flag. Significance indicates a brief pause before the uptrend continues. Entry: consider entering the long position when the price breaks above the upper trend line of the flag, and that's gonna be the most important and interesting thing we are going to discuss in a moment. When it comes to the bear flag, occurs of course in a downtrend similar to a bull flag, but slopes downward, not indicating consolidation after downward price movement. Significance suggests a temporary pause before the downward trend resumes. Entry: consider entering short position when price breaks below the lower trend line of the flag. Now, the most important thing I wanted to point it out here, that's gonna or might be some kind of the filter for you, so I would strongly take that into the consideration. What I mean by saying it could be the filter for you, guys, I would watch very carefully the first attempt to break into the direction, or maybe sometimes to the opposite side, as it could be the trap. Okay, same we have here. Then we move much more lower. Alright, so be careful, especially with the first attempt to break. Let's have a look what we have here. Similar situation on this bull flag. Market was trying to make this first break, especially if we are looking at this breakout over here. Strong move to the upside, the big candle. We moved hit that stops below the low of that big breakout candle, and then we moved higher. Now, depends how we are going to approach, right? Either you may treat that one as a big flag, because there was a resistance, so price from here took strong move, just retest that low and continue higher. So it could be that big flag you want to take into the consideration. So in that case, okay, it's gonna be easy to try to achieve 3-to-1 risk reward ratio, as you are going to make this type of the measure, okay, to try to be on the right side. And with this type of the break, your stop is going to be below, your entry is going to be above the flag, so very low distance in between entry and the stop. So that indicates that 1, 2, 3, even 4 risk reward ratio could be in place when it comes to this particular strategy. And as you can see, we never got below our stop. We were trying to build the support, and easily we hit the target in that particular case. Okay, now another one. Let's switch to this one. Very similar situation, especially we are breaking through the support, all right, moving lower. So there are two ways to try to approach this particular flag, either after the first break or the last leg lower, right? So you have to monitor by yourself. Then we are skipping attempt to first break, and we are trading the next break. So with the lower approach, with the one candle, the target being hit immediately with the 1, 2, 3 rewards ratio, right? We haven't quite hit the second target, but having already 3-to-1 risk reward ratio, you have to at least take a bit of the profit, moving your stop into the entry. So that's where you would be out of the market with the remaining half of your position. I have another example here when it comes to the flag, another bull flag. Let's have a look what we have here. This time very tiny, but very easy to spot this type of the flag. 1-to-1, of course, being hit quickly, and it was, taking into the consideration what we have, it was 4-to-1 risk reward ratio in that case. From that perspective, when it comes to the risk reward ratio, the flag trading might be very useful. That's something I like the most. And again, this trick we were talking about, here everything was fine. Here was the first attempt to break higher. We took more stops to the downside before finally break out. So guys, that could be very useful new weapon within your trading arsenal. As usual, please do your own research, do your own homework before risking real money. With that being said, wish you a great next trading session. See you around, take care, and goodbye.